Oh, great. So, hi, I'm live. And when I was in corporate America, I can remember one of the big, I don't know if it was Deloitte or if it was Price Waterhouse Cooper, could have been E&Y, one of the big, it wasn't McKesson, but one of the big advisory firms that was in one of the corporations in which I worked. There was this really young, pretty, I'd say handsome, I hate to say smart aleck, but kind of like smarty kind of kid. And he was like, he thought he was clever and he was like, so what keeps you up at night, Jamie? And I was like, because I am a robust, I guess, considerer and thinker, and it drives people, including myself, mad sometimes. But I want you all to know that today, I should be sleeping. I can't believe I'm awake, but I am purely going live because I'm trying to think through something. So bear with me. I'm not sure how long it's going to take me to read this, but I am awake and I should be asleep. But the question or the heavy thing on my mind has to do with home repair. And so I leaned on Chat GPT, the free version. Do you know what to expect for metal roofing compared to asphalt? So if roof replacement is 10K for asphalt, what is metal roofing in the market? Response. Metal roofing generally costs more upfront compared to asphalt. It offers greater durability and longevity. A standard shingle roof replacement costs around 10K. You can expect metal roofing to be from 2 to 3 times that amount, depending on complexity and installation. And then I'm going to actually add to Chat's comment there. And they'll get you on the demolition too. So the taking off the roof. Okay. So for asphalt shingles, back to Chat, $3.50 to $5.50 per square foot installed. Metal roofing, $8 to $16 per square foot. And then goes forward to say, so for $10,000 of asphalt roof, the metal roof could be 20 to 30,000. And then of course it talks about this, there's always dependencies. If there's something I learned from all the attorneys that I've and procurement, which is just fancy for, deciding if you're going to purchase a benefit package or buy an HRIS system, IT system. There's always dependencies. So the type of metal, whether it's steel, aluminum, or copper, and the complexity of your roof design. So if it's steep slopes, multiple angles, I think I need to hold my phone back here to make it look like I'm actually reading this teleprompter. That is really my iPhone. Let's see here. Type of metal, whether it's steel, aluminum, or copper, and the complexity of the roof. For example, slope of the roof and any multiple angles and complexities. I'm going to throw in, if you have windows that actually protrude out that need shingling themselves, which a couple of my neighbors do, And I'm not going to explain that any further, or like a sun roof. So if you have sunlights in the roof, and actually, honestly, I kind of feel like I should just do that. Maybe I should just have a huge sunroof window and get solar panels and yeah, whatever. Be done with it. Okay, so anyways, sorry, sidebar. So then chat proceeds to say, however, metal roofing tends to is more sustainable in that it lasts longer, closer to 70 years compared to a max of around 30 years in the asphalt space. It is less maintenance, can improve energy efficiency, which can offset initial costs up front. So then I said, really? And it said, it's understandable why you may have thought the opposite. I'm paraphrasing, you know what I'm saying, paraphrasing. And if they're interpreting my my reading and my voice, my pronunciation is going to be troublesome. Okay, period. Okay, it's understandable why you may have thought that, since there are a few factors that can make metal roofing seem more affordable at a glance. Marketing and availability. So to bullet point that, some companies market metal roofing types like corrugated metal, budget friendly, can lead to confusion because basic corrugation panels can be cheaper, but higher end options like copper and standing seam are more costly. Longevity, while metal roofing has a higher upfront cost, its lifespan obviously is much longer. We already talked about that. May lead to the perception it's cheaper. I got hot tea to try to help me go to sleep. Let's see here. But, obviously this is spread out over time. And then you start talking about, from a financial standpoint, like today's cost of money versus future cost of money. We're not going there. So with metal roofing, you might not need another replacement in the whole lifetime of the house, whereas asphalt, if you stayed in a house, depending on how long you live, could be 2-3 times. Then they talk about energy efficiency. Metal roofs reflect more sunlight, reducing cooling costs in warm climates, which can be beneficial in a marketed way to offset costs, recoup costs. May make it seem like it's financially better as a strategic play, which just simply means the long run. And then the last point that chat presented to me, which was durability. And durability and sustainability is super important for all you kids out there. If you're going to buy a kitchen table, buy it once. So get a really nice kitchen table. Get a couch that's super durable and a bed that's super durable, so that you can buy it once, so that 30 years from when you buy it, it's not going to be folding down and creaky or whatever. Yes, I do not believe in buying couches, every 5 years, like some people. I am not a throwaway person. Okay, anyway, durability. Metal roofs are often more durable against extreme weather, such as wind, hail, fire. Where I live, we do not have extreme weather. Simply, I lived in Minnesota. I'm in Ohio now, but in Minnesota, that was extreme weather. And I think that is a super, super good place to kick the tires for any, like Elon Musk, cars, electronic cars. Are the farmers in Minnesota going to adapt your product? Because if not, yeah, you may have a problem around the nation. Okay, so anyway, just saying, durability may be presented as a money-saving benefit as well. So for all of you college kids that are like tuning into me in the middle of the night, talking about what keeps me up at night. Chat GPT continues. If you were thinking metal roofing was cheaper, it could be to these strategic and long-term saving advantages that would be presented by a good salesperson. And a good salesperson would emphasize the sustainability over the upfront cost. And then I said, you have procurement, and I am tempted to use negotiation ability, yet I know you're a machine. Is there an option that is a third of the cost of 10K? I should have said 2/3, but this is what the response was. So 2/3 of 10K is going to be closer to 7 or 8K. Chat. Oh, I know I'm such a, excuse me for yawning like that. I'm so not a diva or a Hollywood girl, right? Okay, so if you're looking for roofing options, this is chat. If you're looking for a roofing option that is about a third of the cost of 10K or around 3 to 4K, that could be challenging for replacing the full roof. There's a few approaches that may reduce your costs. Basic asphalt, shingles, low-grade shingles, available maybe 3-tab shingles instead of architectural or premium. They're less durable, might get you closer to your budget. Price range $3 to $4 a square foot installed, depending on roof size, another dependency, and local labor cost. Okay, roof overlay. Number 2, installing over existing shingles. This is like putting another layer of shingles on it. I already had that done. Instead of completely tearing off the shingles, you can add a new layer of shingles over the current roof. Structurally sound that can save on labor costs. Only possible if your local building code will allow it, which, you know, my brain goes to, well, why don't I just get a big, huge gazebo and put it over my house? Local code will not allow that. Okay, cost, that's ridiculous. Okay, cost savings. You might be able to shave 20-30% off your total cost in this way. Another option, this is number 3, corrugated metal panels, budget-friendly metal while standing seam. Metal roofs are pricey. Corrugated metal panels, which, just so you know, I think about corrugated boxes and corrugated shipping boxes. You know, I mean, at least in where I live, in kind of a factory area, very, very, not very white collar, which, by the way, I don't think reduces my cost from a supply demand or even a supply chain. I don't feel like the advantages are I think that probably everything is made locally here, and still I'm, you know, afraid that, you know, we are so dumb sometimes that they're going to be shipping things in from Mexico or China or whatever. God only knows. Anyway, just in time and Kasian doesn't usually transfer to the consumer. Okay, so I'm sorry to go Peter singing on you all. Okay, so they won't give the same clean look as the other types of metal roofing, but could be more in your budget. Price range $4 to $5 to $6 per square foot installed. Then they give a do-it-yourself partial installation, do-it-yourself options. If you have some construction skills, you can do it yourself, which can considerably and truthfully reduce labor costs. The one gentleman that I talked to early in the summer, I was like, I will get up on the roof and I will figure out, I mean, I will work alongside your crew. And then, of course, they don't want to take that kind of liability. Of course, you know, I guess people who don't hire bonded teams are assuming some liability too. But anyway, it's saying that that's depending on what, and I would say depending on your ability to look like you are a finished professional in the trades, consider that one carefully. Partial roof repair, explore replacing only a part of the roof that is, damaged instead of a full replacement. I did explore that, and basically the guy was like, 6K or 10K or 5K or 10K. So, yeah, I mean, like, it's not a third is what I'm saying. So I did get a quote today. And then financing options. Roofing companies offer plans that can offer manageable payments. This can be very expensive, people. If you need to kick the tires on that, call Dave Ramsey. He will talk to you about debt and how it's so important that you get on the right side, get in the black so people pay you interest. He doesn't say it that way, but like if you take Mr. Kawasaki, who is a Rich Dad, Poor Dad author, Anthony Robbins, and Dave Ramsey, and you put those three in a pot and you blend them all up and you spit out another guy, I think that, you might get a little bit like ChatGPT. I'm sorry, just kidding. Okay, so while finding a full roof replacement for $3,000 could be difficult, using one of these strategies could help you reduce the upfront costs closer to $3,000. If your main goal is cost savings, stick with basic asphalt shingles, exploring financing for durable options. Interesting word choice there. I've been in the financial services industry. They do all kinds of, super linguistical acrobats to get you to give you their money. Durable options may be the most feasible path. Those are good words though: feasibility, durability, and sustainability. Okay. So then I say, here we go. Bump, bump, bump. If I put 20K into Bitcoin for 1 year, what can I expect from the historic performance? I know volatility is expected. You ready? Probably what some of you have tuned in for, because if you're anything like me, I'm trying to understand this whole Bitcoin phenomena. Okay. So, and if you are my age, which I'm in my 50s, and you used to watch Sesame Street or the Muppets, there's like this cute little phenomena thing that is, I could like insert here, but that would take a lot of time, and I'm not a videographer, and we're not going to go down that bunny trail. Okay, are you ready? Get ready. Okay. Historically, Bitcoin has been a highly volatile asset, and its performance can fluctuate significantly year to year. An overview based on past trends, though, keep in mind, and this is the echoing and predominantly, anytime you're giving advice, you should say, disclaimer, past performance does not guarantee future results. This is, if you ever work for like Morgan Stanley or Merrill Lynch or anybody, you just have to remember this. So yeah, a pro forma statement doesn't guarantee nothing. Okay, ready? Historic returns and annual averages. In 2020, Bitcoin saw massive growth, then increased over by 300% due to institutional interest, macroeconomic factors like stimulus packages. Just keep printing the money. Next. And this, my dears, my sweet, sweet girls out there that are going to become experts, but not in economics and probably more microeconomics, but they, ladies, you don't have to be scared. I mean, $1 million scales down to $1. Okay, you ready? In 2021, continued growth peaking at 60% for the year. A lot of volatilities and ups and downs. 2022, severe decline, losing more than 60%. Everything tanked in 2022. Gosh, my stock portfolio tanked in 2022. Okay, its value amid broader market crashes, inflation, and crypto-specific events like the collapse of, and then Terra and Luna must be coins. Just so you know, for anybody that is wondering what is going on in the Bitcoin space and the crypto space, it's sort of like a mini, and I'm saying sort of, and I'm going to get into this in a minute, and I'm not going to be able to give you the dissertation on this because I'm still learning myself, but money markets many times operate similarly. Okay. There are some distinct and unique differences with this crypto space. So in 2023, Bitcoin rebounded a bit and they gained about 80 to 90% by mid-year. But please keep in mind that it had dropped so much in 2021. And then just so you know, in 2022, obviously the markets in the US anyway, crashed down. So Bitcoin was up in 2022 and 2023. I'm sorry, 2022 Bitcoin lost 60%. In 2023 recovered at 80%. I'm going to keep conservative and say 80%, but I think it might have been more like, might have been 70% or whatever. So still, that sounds incredible. But if it was 60% down the year before and increased 70%, you're really only looking at a 10% gain on your $1 or 10,000 or $1 million. Okay, so this is the nature of the volatility of the markets. And I don't care if you're trading squash and zucchini or commodities or oil or whatever. Okay, sorry. I grew up on a farm, and this stuff is totally transferable, you guys, as far as these concepts. And gals, mostly gals. Girls, don't ever think that you can't understand this macroeconomic stuff. Just because it's $1 million, it can reduce down into, $100 for a purse or $10,000 for a purse. And when I see things on YouTube or like these, I'm not even going to go in there, like these ding dong girls that are spending like 10K on purses, I'm like, what? Okay. Possible scenarios for, so 20K in Bitcoin for a year. That's the scenario. Bullish case. So this is a very high return. So in a positive year, Bitcoin could experience returns of 50% to 200% or more. This could turn your $20,000 investment into $30,000 or $60,000 more. So if I put 20 in for a year and it's a bull run, I could get $30,000 to $60,000 or higher. That's what Mark Moss would probably quote to me. Now, one thing that I think Mark Moss and educators are leaving out are bearish cases as well as mining. So we'll get to mining in a minute. Bearish case, and this is like a low return or a loss on your return. And again, listen, like I say again, because I'm repeating myself, but I haven't said it yet in this podcast, but you only take a loss when you cash it in. So, you don't cash in your chips when the market's down. And if you need, 101 basic training on this, look up Warren Buffett. And, one of his rules and suggestions is to make money. And then the second rule is see rule 1, but said in a different way. And maybe not, maybe this is just my own flair, but don't lose money. So, if you can, obviously, if you can up, and always have returns, your money's going to grow best. But then, of course, you have to know at what rate. But for compounding purposes, people, the volatility impacts compounding. I don't even feel like we talk about that. Okay, so anyway, in a down year, Bitcoin could lose a large portion of its value, similar to 2022. This could turn $20,000 into $10,000 or less, depending on downturn severity. If you're listening to any of the money market auctioneers that are on the news, this may sound familiar. Okay, flat or moderate cases. In a more neutral scenario, Bitcoin may see more modest gains or losses, and in this case, you could expect 0 to 30% growth or decline, which could take $20,000 and take it close to like 18,000 to 26,000. That seems like probably the most likely, like a flat moderate case. That's the best way to be conservative. So this is, again, me plugging something into ChatGPT. Now we're going to go 1, 2, 3, 4 considerations. Then I'm going to get into key takeaways. So market sentiment, Bitcoin's price is heavily influenced by public sentiment, which means opinion. Institutional adoptions, which means I can't purchase a roof with Bitcoin, nor can I buy a loaf of bread and a stick of butter. And oh, by the way, what's the third thing on the Sesame Street? Gallon of milk. Oh, Sesame Street teaches preschool economics, just so you know. Okay, so regularity. I hope I said macroeconomics events play a factor. For example, when in Asia we see a major drop in Japanese markets or Chinese money goes way down, same sort of thing. The continents and the global markets all act, they relate to each other. There are reactions and there are responses. Okay, so number 2, regulatory developments, new regulations, especially in large markets like the United States of America, could significantly impact the price. 3 is adoption, which is boom, where I land. Increased adoption by corporations or countries. This is like, we used to say Forex inside the corporate walls. I guess, we just got to see if, Grandpa Warren's not investing in Bitcoin, but, brother, his, God rest his soul, Charlie may have been. But, all right, here we go. Market cycles. Number 4, market cycles. Bitcoin follows cycles of. Now, this is what I rarely hear about when it comes to cryptocurrency. It's called halving. HALVING. So if I was teaching, I'd write that on the board or the whiteboard and say, let's park it here and talk about this for a second. So halving has triggered bull runs, typically a year later. You ready? My goodness. So the key takeaways here, folks, Bitcoin's volatility means 20K could either grow significantly or lose substantial proportion of its value. On average, high risk, high reward is the norm for Bitcoin. So you can expect extreme and wild volatility swings, not upticks, but upward bound, downward bound swings in the market, okay? Anywhere from large gains to deep losses. Again, you only gain or you lose if you cash in the money. So if it's in the market and it's bubbling and boiling and, or I say getting soapy, sudsy, bubbly, leave it. Simmer might be the best long-term, but I don't know. If you're looking for more stable returns, traditional investments such as stocks or bonds or FDIC high yield checking accounts could be more suitable. My inquiry is to ChatGPT, halving like stock splits? Bitcoin's halving is a bit different than a stock split. While both events can affect the supply and potentially influence the price, they work in distinct ways. Are you ready? Get out the pencil. Okay. Yeah, write it out. Okay, Bitcoin halving. What is this? Well, every 210,000 blocks mined, which is give or take roughly every 4 years, the reward that miners receive for adding new block to the Bitcoin blockchain is cut in half. This is coded into Bitcoin's protocol and is meant to control the supply, which is so important. Control the supply of new Bitcoins entering into circulation. So those two coins that crashed are, in this conversation, people, mental note. Okay. Next bullet point, effect on supply. The halving reduced the rate at which new Bitcoin are created. So as of now, just so you know, I'm in 2024. As of now, miners earn 6.25 BTC, which is the ticker number for Bitcoin, per block. But after the next halving, which is expected in this year, 2024, if you want to look up somebody, Mark Moss is talking all about this, chit chat, chatter batter. And then they will only earn 3.125 per block in 2024. I don't know if that shift has happened, but this limited supply, as of today for me, this limited supply tends to create scarcity, people. Historically, it has led to price increases over time as demand remains steady or increases. Okay, so we've got the federal banks printing money. Bitcoin has this recipe where it mines on a cycle basis. So let's just say 4 years. Okay. And so it's been around since 2018, people. Just if you need a point of reference, it came about after, for me, I think of huge events, and I was a Series 7, Series 66 employee for Morgan Stanley and did pay attention to this sort of thing. But anyway, the market impact, I'm not going there. Okay, the market impact in the past cycles, having events have often preceded bull runs. This decreased supply I beg your pardon, I am tired. The decreased supply can lead to higher prices if demand stays constant or grows. But it can also lead to volatility as markets adjust. So stock split. What is a stock split? A stock split, now I feel like the university professor that I always dreamed to be. What is a stock split? A stock split occurs when a company increases number of shares by issuing more shares to existing shareholders. For example, in a 2-for-1 split, shareholders receive 2 shares for every 1 share they own, but the prices of each share is halved, so the overall value of their holdings remains the same. So I guess it was not a bad question to ask. effect of stock splits on supply and demand. Stock splits don't change the value of the company, the shareholders' total value. They are primarily done to make shares more affordable. It's called like diluting. Think of a glass of orange juice. You drink half of it and then you pour water in it. Well, anyway, I'm not even going to spin into what inflation is doing. Okay, let's see. They're primarily done to make shares more affordable to smaller investors by lowering the price per share, although the company's market cap remains constant, unchanged, people. Okay, the next bullet point, market impact. Stock splits usually have no fundamental impact on the company's valuation, and they may increase the liquidity, which, for those of you who don't know, liquidity is how quickly can you liquefy your money? How can you cash it in? How easy is it? So sometimes your money gets stuck in the market. Okay, so it may increase liquidity and make the stock more attractive to retail investors, which is us, like little people, not hedge funds, not brokerage houses, certainly not banks. Gosh, I hate banks. I worked for a bank. Ugh. We talk about dealing with pennies and pettiness. That's what I think. And my gosh, the bank that I worked for was all about, perceived image. I'm going to barf right now because, I can't control somebody else's perceived image of me. And if I actually had a boss that told me it was my responsibility to control perception, and I was like, in my head, you are a flippin' insane chick. Okay, here we go. This can sometimes lead to a short-term price increase. It's not guaranteed, people. Okay, so that's my whisper. The key difference. Bitcoin halving reduces the rate at which new Bitcoin are created, impacting the supply and potentially driving up the price over time, as long as, and this is important, the demand remains strong. Stock split changes the number of shares outstanding without affecting the overall value of the company. It doesn't change supply and demand dynamics in the same fundamental way as Bitcoin's halving. I'm going to read that again because it didn't register in my mind. A stock split changes the number of shares outstanding without affecting the overall value of the company. It doesn't change supply and demand dynamics in the same way fundamentally as Bitcoin halving. Bitcoin halving is unique in that it is a mechanism in the cryptocurrency world, enforces its deflationary nature, whereas stock splits are more about share accessibility without altering intrinsic value. Oh, now I think that might be one of the first times, and I had this really all over the place. I had a couple of phenomenal finance professors at the University of Toledo, but the one that was the most interesting was considered ADHD by some of my colleagues. I followed him, but only because I had to, map out my notes. In other words, he was sort of talking about something and he would go on these little tangents, and then he would have done us all a lot of good if he just would have gone on those tangents and gone back to the core. But just like many people that have maybe ADHD, and I am totally assuming this. So any of my finance professors, I can think of 3 of them right now, don't get mad at me for saying that. Okay, so about having, now this is my question to the chat, right? ChatGPT. So about having, is there something better to use as an example and help me explain tactical and strategies? I'm looking for a better example. And this is what it says. A better way to think about Bitcoin halving. I know that you guys don't want to see my head. Yeah, my head cut off. Certainly, I'm not in my stock broker attire. Okay, a better way to think about Bitcoin halving in a strategic and tactical context, people, may be to compare it to scarcity-driven supply control. Can you think oil and gas? So let me back up. Scarcity-driven supply control strategies in economics, or even resource management, which is a fancy word for rationing in games or industry. Here's a clearer way to break it down. Strategic example, gold mining, scarcity-driven supply. Imagine you own a gold mining company that initially extracts 100 ounces of gold per day. After a few years, due to the depletion of the resource, the amount of gold you can extract drops to 50 ounces per day, despite using the same amount of effort and resources. And oh, by the way, it could be depending on the cost of money. Okay. This reduction in output makes gold more scarce, potentially driving up the price as demand stays constant or increases. Oh, by the way, stuff what derivatives are, and they make people nervous in the classrooms because they get complicated. Okay, strategy. Long term, you know that gold will become scarcer, and so your business model anticipates this, decreases supply to increase the value. Let me go back and emphasize increase the value of the gold that you still mine. Now, tactics. This is the next bullet point. In the short, you can adjust your business operations in the short term. Now we're talking time, right? In the short term, you can adjust your business operation, reduce costs, and or find ways to increase efficiency because you're mining less gold, but at a higher value. Similarly, Bitcoin halving, and this is done on the blockchain, Bitcoin halving reduces the reward for miners, which means you got to get in early, people, if you're going to make the most money. It's like an early ground level kind of thing. Although it's always good to get in, it's never bad to plant a seed, plant a tree, plant. Okay. Bitcoin halving reduces the reward for miners, making new Bitcoin scarcer over time and potentially increasing the price as demand outstrips supply. The halving happens on a fixed schedule, so it's an event, a strategic event. Investors can therefore anticipate it, and so can miners. And in all of the cryptocurrency conversations that I sat in on during the pandemic, that was kind of the place that got a little hard for me to get my head around, is the mining place. All right, we have not finished, so here we go. Tactical view, halving in the Bitcoin's context. On the tactical side, Bitcoin halving presents both opportunities and challenges for different players. Miners, before the halving, miners know that after halving, their rewards will decrease. They may choose to upgrade equipment, increase mining power before halving to maximize profits, which is kind of interesting. It's kind of a flip. After, when it comes to planning, when it comes to controllers, taxes, planning, those kinds of things. When you're going to spend your money, if you're going to spend it today or after it's been mined, probably is more valuable today in this case. Okay. After the halving, mining becomes less profitable. So only the most efficient miners can remain competitive. Aha. And they may adopt new technologies or optimize operations to maintain profitability. Here's my concern for the little guy, the end people, the little gals, the me's, right? Like they're pushing for us to buy wallets right now, but in the hard drive space, thank you very much, Asia, because that's where the technology came. I've had 2 hard drives, maybe 3, fail on me. So they're not coming out of China either. So, actually I'm purchasing from, there's only 2. We talk about technology chips and things, but yeah. So I don't trust portable hard drives. I'd be pretty hard pressed and concerned about trusting, these hard wallets. Okay. I'm just throwing in my, 2 cents there. Okay. Tactic. Miners may decide to hold on to the Bitcoin that they mine before the halving, which anticipating that the reduced supply will increase Bitcoin's price later. And that's what they were talking about. The bull run. A kind of a clever way to say that is maybe more of a ricochet in the, the rubber band snaps forward. But the question is, for how long? There's always adjustments in the markets. Okay, excuse me. Now we're only on, that was number 1. Now we're going to number 2, investors. Stay with me because I'm the one that's being kept up tonight. Okay, investors. Before the halving, investors might buy Bitcoin in anticipation of the price increase, knowing the supply will be constrained soon. Historically, Bitcoin's price tends to increase within a year of halving events. No guarantees. No guarantees. After the halving, some investors may wait for the market to adjust or react, looking for buying opportunities during post-halving volatility. This is why Berkshire Hathaway, aka Grandpa Warren Buffett, is who I finally refer to, has money on hand so that he can have like cash on hand. Cash on hand allows you to go in the markets and make coin/bank. Okay. All right. But you have to be you have to become a whale, or in that case, Berkshire Hathaway, you got to be enormous. They're just major, lots of money. Okay. Tactic. Investors may time their entry or their exit points. This is true and may be true in a career, but often doesn't operate like this. But, again, entry and exit points, taking advantage of price spikes, drops around the halving event. Now, before I say and move on to number 3, with the market and market timing over and over again, financial services people will say, we can't seem to time the market. So the unpredictability, and now Bitcoin it's going to impact the next 100 years. With all this technology, I don't know that we're going to unplug and go backwards and the grid is going to turn off. Right, Elon Musk? Okay, here we go. Number 3, network participants. Long-term strategy. Bitcoin halving is baked into the system, ensuring it becomes progressively harder, there's that word progressives versus conservatives, to mine and more scarce over time. The scarcity is part of the long-term strategy, people, which is always wise if you're thinking about money or chess. See if you can Do the long term, think long, not short. Football, go long. Have three people down there to throw that ball to, right? Okay, long-term strategy to keep demand high. Short-term tactics. Participants can adjust their activities, whether it's trading, mining, or holding, based on expected market reactions around the halving. And we continue. Simplified example. Resource management in a game. Are you ready? This is going to relate to you because you're a bunch of gamers, but ladies, pay attention. And I mean, pay attention because our game is, like I said, purses and food and just other things like shopping and nails and stuff, but it works the same. Okay. So gaming, but I think, and I could be mistaken, but we will see in a moment. I think they're going to be speaking about video games. And so, ladies, we just don't, we'd much rather shop than pretend to shop. So there's not a lot of shopping video games, whatever. Imagine a video game. Are you ready? Imagine a video game where you have certain amount of resources like wood, stone, or gold that regenerates every hour. Therefore, some of you are smirking because you know what game I'm thinking of. However, after a set amount of time, the regeneration rate is cut in half. You now have half of the resources to work with, but demand for those resources remains the same. Strategy. Knowing that resources will become more scarce, you start stockpiling resources. Think Joseph in the Bible before the cut happens. Okay. There's a Bible story. Think that's a 14-year chunk. So just Google it. Joseph, the Bible, 14-year. Okay. Tactics. You may focus on upgrading your tools, your skills to make sure you can gather resources more efficiently when they become scarcer. So, in Bitcoin's case, the strategy, emphasize the word strategy, revolves around planning for scarcity, just like the resource cut in the game. While the tactics are short-term actions, the miners and the investors take before and after halving to adapt to changes in the reward structure. You guys understand it? It's like a game. I'm proud of you if you've stuck with me because I've been going strong for 52 minutes. Okay, stay with me because we are at the summary point. In summary, strategy. Halving is part of Bitcoin's long-term deflationary model, people. So we hear all the stuff in, inflation. So Bitcoin, deflationary model, like a business game or anticipating scarcity and increased value over time. It's fancy monopoly. Okay, tactics. I mean, I take that back. You don't really sell real estate in monopoly. You just gain. Okay. Tactics. Miners. Well, I guess you could. Wasn't my favorite game. Okay, tactics. Miners investors adjust their actions around halving events, upgrading equipment, stockpiling, or time investments to optimize their short-term outcomes based on the strategic event. This perspective helps explain the combination of long-term strategy driving scarcity and short-term tactical adjustments where participants make adjustments to capitalize on or survive the changes that halving brings. So I hope that that satisfies some of your curiosity about how Bitcoin and Bitcoin's halving could impact investments. And I hope that you learned how this key. I hope that, okay, let me reword this. If you were curious about how Bitcoin's halving could impact your investments, I hope that this presentation helped you learn how this key event, or I want to say key phenomena, drives scarcity, not abundance, and what it means for your financial strategy in purchasing and deciding if, in my case, I take $20,000, which could be completely a fictitious amount, and put it into Bitcoin and could, perhaps make that money to pay for my roof. So that's the end. And if you need to know how to spell chew, just think the little engine that could. Okay. All right, my friends. Mwah, mwah. That's my middle of the night muse. And so I thank you very much for joining me in the raw, like salt of the earth ish. Yeah, with no makeup and in my, sleepy tea. So God bless you. Mwah, mwah. God bless you good. I hope this added value. And yeah, comment below. I didn't see anybody join. I'm assuming that I am out here alone, but in the future, somebody will take a peek at this. So thank you. And thank you very much. And see ya. Deuces 44. I'm out the door. Bye.